morning, everyone. Good morning, everyone. It's a bit quiet here. This summer, I was visiting my home country of Kazakhstan, and I was so impressed by the local FinTech that is adopted by everyone and everywhere in Kazakhstan. It's called Kaspi. I don't work for Kaspi, by the way, but even my grandma's using Kaspi. And it's used as a digital wallet, as a banking solution, as a mobile wallet, peer-to-peer payments, and I can even use Kaspi to send money abroad to my relatives. Looking at the adoption of Kaspi, it made me think of a thesis that payments, mainly, and cross-border payments are so heavily influenced right now by consumers and the products that are there by consumers. This is the main driver in the payments world, and specifically cross-border payments. I want to show you the evolution of cross-border payments, and you can see here behind me just how far ahead we are in the world of payments. So from gold coins to digital wallets, the payments industry has been always evolving. And I want you to visualize that right now in the fintech industry, we probably are in the last 30 years. Our industry is not that old. And we've been making massive leaps in the last couple of years. And specifically in the past couple of years, it's been aided by the pandemic, and the businesses and the payments landscape have been completely transformed at a pace that we haven't seen before. We've witnessed a remarkable growth in the market, and today I want to talk about what's driving this change, what are the obstacles, what are the opportunities, and what's the outlook for the future. Juniper Research has recently stated that B2B cross-border payments are to be valued at 40 trillion USD by 2024. That's a huge market, 40 trillion. This is about a 9% growth from 2022, when it was estimated at 37 trillion. Just let it sink in. That's a huge number. Let's jump back for a minute to my thesis about the peer-to-peer payments and how they're the driving force in the evolution of cross-border payments. Consumer behaviors and the choices consumers make in the payments world really make us rethink how to change the technology and the services in the B2C market that are offered currently. They really are driving this change. But in the B2B payments world, it's a little bit different. There's a lot more obstacles and a lot more struggles. Let's look at, oh, sorry, I skipped here. I just wanted to also mention, so all the different aspects of technology that are offered around the peer-to-peer payments and B2C payments. So we have the digital wallets, we have mobile payments, it's all around, the solution is all around the bill payments, right? But in the B2B world, we're lagging, as I said, and it's a little bit like the tortoise trying to chase the hare. Quite slow, very antiquated systems, antiquated schemes, antiquated models, and we are undergoing a slower transformation due to different regulations. And still, I still see some intriguing opportunities and in the future. I want you to have a look here. This is, we've been operating under this typical structure for many years now. And let's peek behind the curtain. So this is a simplified view of your typical cross-border B2B payment. And it still, I think, looks rather complex. It has a lot of underwater rocks that are involved in this structure. And there are many aspects that need to be considered. What currencies you are using, what rails, what schemes, what corresponding banking network. and currency conversion, the ascending country, outgoing country, and of course then all the different regulations of those countries. Many players in the structure. And B2B transactions have many challenges, as I mentioned, and we'll uncover these challenges and I'll lead you through it. So the speed of settlement, for instance, is one of the challenges. Companies want to send money fast, the suppliers want to receive money fast, also money gets lost on the way, it's very difficult to track these transactions, identify where they are. At times your own corporate bank may also not give you access to all the currencies that you need. So for instance, you are receiving in euro and you want to pay in Singaporean dollar, you might have to go through another correspondent bank to get access to this currency. It's complicated. The regulations change and you may not always be aware of it. You know, with the current economic status, political status of what's everything going on in the world, the regulations are changing really, really rapidly. Banks also change their risk appetites. Very often you may work with a bank and then from one day to the other without any warning the bank says we have to close your account in the next 30 days and you need to find a new banking provider. What do? It takes about 6 months on average to apply for a new bank account, corporate bank account. If your business is also growing and you need to enter new markets, the banks may not necessarily support those new markets. What do? You need to open a new bank account in the country where you're operating now. That's again another 6 months lost. And costs are not very transparent also with banks, and cross-border payments are particularly expensive. But we have a positive outlook in the future. I think there's some very good emerging trends that are reshaping the way of B2B payments. And I'm really, really excited personally about these developments. So let's identify some solutions and what's happening. There are some promising solutions in the world of B2B payments. And these are starting from APIs to AI and agile tech. This is all bringing some changes and positive changes in the world of cross-border payments. FinTech solutions can aggregate services and offer cheaper, more transparent alternative than to standard banks, classic traditional banks. CBDCs, cryptos, and DeFis, they're offering solutions through blockchain and enable buyers to have freedom from the government interface and obviously also personal privacy. And CBDCs have potential to really revolutionize cross-border payments in the sense that it will allow businesses to do international payments using digital currency, and that will make it faster and not to be relying so heavily on traditional structures. And it could also help us, obviously, with fraud and risk to use the blockchain technology. Real-time payments have proven that blockchain and smart contracts expedite the time, so we want to increase the speed of the payments. And also, we have to look for Swift GPI and Visa Direct that are currently working and exploring on how to make this a reality. And when we're looking at this journey, let's not forget that although there are many advancements in the technology, there's also higher and greater risks in terms of fraud, money laundering, and cybercrime. These risks keep rising, actually. And to overcome these risks, the collaboration is the name of the game. And I think it's a very important message to send out that traditional banks, neobanks, FinTechs, and regulators all need to collaborate together in order to find a better solution for the future. And finally, there is a great agenda of G20. On the roadmap, we want to decrease the costs and increase the speed, transparency, and access to cross-border payments. I want to conclude to say, so I work for a company called Freemarket, and the reason why I was presenting to you this time about cross-border payments, and particularly B2B cross-border payments, is because Freemarket is a specialist in B2B cross-border payments. We have our own proprietary platform that gives our customers access to payments accounts and FX, and we're using an aggregated network of banks in order to provide the solution for our customers. So if you want to speak to me more about cross-border payments, please find me throughout the 2 days of the festival. And if you have any questions, here you go. Thank you.
Hello, thank you so much. Slider's on, and we have one question. So how do you succeed brand loyalty against other aggregators in the times where attention spans are minimal?
What we focus on specifically is having an aggregated network of banks. So it's not only one bank, it's not only one solution. So we provide resilience to our customers, and I think that's the most important. As I mentioned, one of the risks is that banks change their risk appetites, right? And we all know also, for instance, what was happening in the winter time with the banks in the US in terms of crypto. You don't have access any longer. So we need to make sure there's always a second provider or maybe even a third provider available in terms of banks to give them a solution to solve the issues and switch from one banking provider to the next.
So this is kind of your key advantage in a way.
It's a key advantage, definitely.
What you're saying in terms of the traditional banks and what you're basically offering.
Yeah.
Okay, so if you guys don't have any more questions, I'm very disappointed, I have to say. But then thank you so much, Alana, and we move to the next one.
Thank you.